What I have prepared is a presentation where you will see three main topics. One, what has happened till now in 2013. Then, what we think is going to happen in the next 4 to 5 years. And finally, some opportunities that is offering the market for those investors that want to access the Spanish market. How was 2013? For the first time in the last 3 or 4 years, I have good news. We have had a lot of appetite from different investors to take positions in our market. And as you can see in this slide, during 2006 to 2012, and at, I would say, the inflection point was last summer on 2013, when I think the perception about the risk on the country changed dramatically, and investors started to take positions in more in the southern European economies than the central and eastern economies. But inside these southern European countries, Italy was the protagonist from 2006 to 2013. But in the last 2 quarters of 2013, as you can see, the light green, which represents Spain, is much bigger than the dark green, which is Italy. Here you can see how was the difference between the change year on year in 2012 and 13 in the different sectors. And as you can see, in the office market, we have increased the volume. In the retail market, that was not appealing at all in 2012, we doubled the turnover. In industrial logistics, we have 3 big transactions for the first time in the last 4 years. There were three portfolios. One was an AXA portfolio. The other one was a disposal of CBRE Global Investors by chance. And the other one was a big pan-regional investment that took place in Central Europe and Southern Europe, and it was a disposal of 50% that Prologis sold to Norges. Okay. In others, we have hotels, we have bank branches. We closed the biggest transaction in Spain in a single transaction, which was a big portfolio of 300 bank branches. We advised before Moorpark when they purchased this big portfolio to Banco Sabadell, and then we have been selling some of these bank branches for the last 3 years until we found another investor that wanted to purchase the 300 bank branches that were in hands of Moorpark. And it is important because the purchaser was again a Mexican investor. In 2012, we had another Mexican investor, Carlos Slim, which purchased 500 bank branches to La Caixa. And in this case, it was a REIT for the first time that operated in Spain. And this REIT purchased, which are called Fibra in Mexico, they purchased these 300 bank branches, okay? Well, but in terms of volume, we have reached roughly 5 billion, which is to go back to 2004 or 5, okay? And we have increased, as you have seen, in all the sectors. One important thing is that for the last 5 years, the destination of, or the allocation of the investment were very unbalanced. And currently, it is much more balanced, except from industrial and logistics. Another important thing, we didn't have any big transaction in the residential market. And the fully let portfolios were the protagonists of really big transactions that took place in 2013. Some of them were in hands of banks. The others were public disposals of, for example, the City Hall of Madrid or the regional government of Madrid. They sold, in one case, a portfolio of 100 million. The other one was a 200 million portfolio of fully let subsidized housing. And a part of this, we had another big portfolio that was a disposal of Sareb, our bad bank. It was another 100 million transaction. And a part of this, we also had some disposal of a private developer, which was FCC, that sold a big portfolio of 25 million, extra millions, to Blackstone, who was the most active purchasing these kind of properties. And as you can see, roughly 84% took place in the second half of the year. Well, in terms of geographically, how was the destination of the funds? It was completely shared between Madrid, Catalonia, and the rest of Spain. But I think we didn't have more transactions because of the financial market conditions that, fortunately, are improving now. This chart is representing the end of 2013, but currently you can get a ticket over 50 million instead of 40, and a maximum loan-to-value of roughly 60 to 65% instead of 55. So I think the finance market is improving, and this will push some investors to take positions because some of them were looking for some leverage for investing in Spain. Well, one reason because all these foreign investors have been so active in Spain is because we had a really big adjustment on our prime rents in the office market. As you can see, after Dublin, we were in Barcelona and Madrid, the cities across Europe that adjusted more the prime rents. But we didn't start the recovery process, and Dublin hasn't started yet. Well, another thing is the yield compression. As you can see here, in the middle of the chart, you can see Madrid or Barcelona, and you can see the range that you have on the yields. We had, in the peak of the bubble, we had levels of 4.5, 4.75, and we are currently in levels of 6 or 6.25 in the office market. So we have a long way to make money by investing in Madrid or Barcelona. Well, here you can see the capital values, the recovery on the capital values. And here, Madrid and Barcelona, you can see a small recovery in the cap values. This is not because of the rent, because we have seen that the rental growth has not started already, but we had a small yield compression because of this big appetite of the investors. And another reason, because of the investors are now so active looking for properties in Spain, is because we have a really big spread between Madrid or Barcelona with the average on the capital values in Europe. As you can see in this chart, this is the evolution of the yields historically, and at the end of the chart, you can see how we had a very deep compression on the high street retail market. This is because the most active investors in Spain have been family offices and private investors, and they were very keen in investing in this sector since it's very secure and it's a very defensive product. But we also had a compression on the logistics because some big investment funds have been betting for big portfolios, as I told you at the beginning of the presentation. Well, and the capital flows. The capital flows, we receive more than 65% of the total invested from, were cross-border investments. And what is important is that we are receiving a lot of money from North Latin America and South Latin America. Across Europe, you can see here better that we have received a lot of money from France, and we are now receiving a lot of interest from not only from Europe, but from Mexico and from the US, okay? Well, what do we think is going to happen in the rental growth in Madrid? Well, our expectation is that rental growth is going to take place in the next 5 years, in the next four to 5 years, and it will represent 20% of effective rent without CPI, okay? In the case of Barcelona, the increase that we are expecting is roughly 17.5%. If we add to this the yield compression that we are expecting in the next 4 years, you will see that Madrid, in a pan-regional context, Madrid and Barcelona are in the top 5 cities in which we expect a rental growth, a biggest rental growth in the next 4 to 5 years. And adding to that the yield compression, we will have both Madrid and Barcelona in the top 4 cities to get a total returns, a biggest total returns across Europe. What opportunities is offering our market? When one is Sareb, the bad bank. They will need to put on market a lot of new projects, okay? Maybe some of them are familiar to you because some of them has been closed last year. Also debt corporate finance for property companies, listed and non-listed and private, okay? Colonial, you probably know that Colonial is having a lot of rumors about the debt, Reale as well, but Metro Vaquesa or Vallehermoso or Testa could be another companies to take positions in the debt, okay? Well, another big trend, public disposals. We will continue doing public disposals. Last year, the biggest one took place in Catalonia. It was 13 office buildings that were sold to AXA Real Estate. It was a volume of 174, but we expect new public disposals of this Andalusia government and the Catalonia government again. And probably Madrid will continue selling properties. Madrid is not selling big portfolios, but the regional government is making some auctions to sell single properties in the city. Well, subsidized housing and fully let residential portfolios. This is another trend. There is a big appetite from different investors to take positions in this kind of product, okay? And we have seen all these vendors marketing some big portfolios, and those investors were the most active taking positions on this product. Another important trend, during 2013, most part of the financial institutions sold the platforms they have for the servicing, for the servicers they were owning. And it makes us feel like Centerbridge, Kennedy Wilson, Barclays, Lone Star, all these investors, they have now a really big platforms to manage good product and not so good product that will be marketed probably by the banks. Finally, another important thing to bear in mind is that our government is working in launching new tax-efficient vehicles in Spain. 2 of them are really important, and probably we have here a lawyer that can explain us better, which is a SOCIMI, which is probably a REIT, okay? We had this figure before, we had this vehicle before, but it didn't work because it was not exactly a REIT. Currently, it's exactly the same kind of vehicle that you can find in the US or in the Netherlands or in any other part of the world. So it's very competitive, and I think it will, a lot of investors are going to invest in Spain through these kind of vehicles. And the FABs. The FABs is a new vehicle that has been created just for those investors that would like to invest with Sareb, with the bad bank. It's a new vehicle that probably then Alfonso can explain you better. And that's it. It's a brief presentation, but just to give you a flavor of how is the market.